What is up guys? Welcome back to yet another exciting video. Today I'm going to be showing you guys how to correctly identify order blocks within the market and how to grow a small account using the smart money concept. But before we get into the video, if you didn't subscribe, do make sure that you subscribe to the channel and like this video for the YouTube algorithm, and let's get right into it. So to correctly identify an order block within the market, what we want is two candles. So we actually want one candle that is smaller and another one that completely engulfs the smaller candle. So if this was actually a bearish candle, and this would be our bullish candle where the market is actually pushing all the way to the upside, and this would typically be at a level of support. So if the market was actually coming all the way to the downside like this would be our bearish candle, and after this bearish candle you would see a huge impulsive bullish candle. And how you're going to be identifying your order block is that you're going to be covering your bearish candle like this, and this would be an order block. So what's going to happen afterwards is that the market is actually going to continue pushing all the way to the upside, and it's going to come to our order block. It's going to come to the zone right here. It's going to come to the zone, and what we want the market to do in the zone is for the market to actually change in character. So here we can clearly see that the market was actually making lower lows and lower highs, pushing all the way to the downside, and it was actually breaking structure, pushing to the downside, implying that the market is in a strong downtrend. But when the market actually arrives or gets to this order block right here, what we want is for the market to actually change in direction. It is however important to note that just because you identified your order block doesn't mean that the market is going to respect your order block. Sometimes it happens that the market actually continues pushing all the way to the downside to invalidate your order block. So you have to be very careful with how you approach it. So what we want the market to do when it gets to the zone right here is for the market to actually change in character. If the market was making lower lows and lower highs, pushing all the way to the downside and breaking its lows, we want the market to actually start changing in character and start breaking highs. So when the market actually breaks its high, it's going to be a good indication that the market wants to start pushing all the way to the upside, and this is when you're going to be taking your buy to push all the way to the upside and buy the market. So to recap, what we want is for the market to actually give us a bearish candle and a bullish candle, where the bullish candle completely engulfs. The candle has to completely engulf this smaller candle and push all the way to the upside. So this would be a huge impulsive candle. This candle right here would be a huge green impulsive candle pushing all the way to the upside, and what we're going to be doing from there, we're going to be covering that bearish candle and stretching it out like this and forming a zone. It is also important that you have to cover from wick to wick. That is how I do it, and this will actually give you a proper zone to be working on. So the market is going to be pushing all the way to the upside. Once it gets to your zone, you have to be very careful with how you approach it. You shouldn't just buy because the market is in your zone. You have to wait for the market to actually change in character and start pushing all the way to the upside, and that's when you're going to be taking your buys to push all the way to the upside. Let's look at a bearish order block and how you would actually take it. You want the market looking something like this. We would have a bullish candle pushing all the way to the upside and a bearish candle that just pushes all the way to the downside like this. Again, this would typically be at a resistance level. So this would be a resistance level where you have a green candle that signifies a corrective move. This would be our nice wick right there, another wick right there, and this would be our bearish candle pushing all the way to the downside. So it would look something like this. And what we want to do from there on is that we're going to be connecting the two wicks from wick to wick when stretching out the zone like this. So you can clearly see that I touched this wick right here and this wick, and this would actually be our order block, and we're going to wait for the market to continue pushing all the way to the downside. And when it starts pushing all the way to our zone right here, this is when we're going to pay close attention to what price is doing. Again, you don't want to just sell because the market is in your zone. You want to wait for the market to actually start changing in character. So if the market was pushing in a strong uptrend like this, you want the market to start reversing and changing in character. So we're not seeing higher highs and higher lows anymore. We're seeing lower lows and lower highs, and this will be a good indication that the market wants to start pushing all the way to the downside, and you can take your sell to push all the way to the downside. Now that I showed you guys how to correctly identify your order blocks within the market, let's look at how you would actually grow a small account using the smart money concept. And to do this, I want us to actually go to a real chart so that I can show you guys how to go about doing this. So the first thing that you want to do is hop onto a 4-hour chart. because we're going to be dealing with a small account, you want to start on a 4-hour chart. And on a 4-hour chart, there are 2 rules that I want you guys to follow. So in an uptrend, you want the market to actually give you a corrective move pushing to the downside so that you can continue with the market pushing all the way to the upside. This is the number 1 rule that you have to follow if you want to grow your small account. In an uptrend, you have to strictly wait for the market to give you a corrective move so that you can continue pushing all the way to the upside. And in a downtrend, so if the market is moving to the downside, you want to wait for the market to actually give you a corrective move. So the market has to give you a correction or an exhaustion to the upside, and you can continue with the market pushing all the way to the down. So when we hop onto the chart, we can clearly see that the market was moving in a nice uptrend. The market was making higher highs and higher lows. You can clearly see that it's higher highs, higher lows, and it's easy to actually identify this. I always say in my videos that you have to focus on these type of setups because they are very clear and they are not confusing. The market is clearly moving in an uptrend, and we know that in an uptrend, we want the market to actually push all the way to the downside so that we can continue with the market. So if the market is actually pushing all the way to the upside like this, you want the market to continue breaking structure. So the market has to break structure, and after breaking structure, this is when you're going to wait for the market to actually give you a corrective move to the downside, and that's when you're going to look for your order block on an H1 and you can continue with the market. So how the strategy actually works is that you wait for the market to give you clear uptrend movement, and after the last impulsive move, so when you see the last impulsive move like this on a 4-hour, we want the market to actually give us a corrective move. So the market has to push all the way to the downside to give us a corrective move so that we can continue pushing to the upside. So in an uptrend, we want the market to give us a corrective move to the downside so that we can continue pushing on with it. So from this chart right here, the market actually pushed all the way to the upside to wipe out the stop losses, and that's when it returned all the way to the downside. So when the market actually returns to the downside, what you want to do is to switch to a smaller time frame like your H1 or 30 minutes chart. And from here, you're going to be looking for your order block. I showed you guys how to identify an order block. You can clearly see right here that we have a bearish candle. And right after this bearish candle, the market just pushed all the way to the upside with this huge impulsive candle right here. What we're going to be doing from there on is that we're going to be connecting wick to wick. So we connect wick to wick and we stretch it out like that. And you can clearly see that after the market wiped a lot of stop losses right here, it started pushing all the way to the downside, and it came to our order block. So what we want from here on is for the market to actually start changing in character. We can clearly see that the market is pushing all the way to the downside, and this is a clear downtrend where the market is making lower lows and lower highs. And once it came to our zone, we want the market to actually start changing in character to start simulating an uptrend. And we can clearly see that we do have a lower low, lower high, lower low, lower high. The market pushed to our zone, and this is when it started changing in character, and this would be the right time to actually start taking your buys to push all the way to the upside. So this would be your first trade right here, where you take your buy to push all the way to the upside to your 90% rule, and this would be your TP. And you want to step out of the market when the market actually reaches this level, because what usually happens is that the market actually pushes to this level and it starts reversing to the downside before it continues pushing all the way to the upside, because the big players in the market know that a lot of people are looking at this level to start selling. They think that this is a resistance level and they're going to start taking sells, thinking that the market is going to push all the way to the downside. But what the market usually does is that it pushes a little bit up and then it comes to the downside and then it continues pushing all the way to the upside. So it's always advisable for you to step out of the market when your trade starts reaching this level right here, or you can always just trail your trades and wait for the market to continue pushing all the way to the upside. I want us to look at another example on how you can actually use the strategy to grow your small account. And let's look at a different pair. Let's look at AUD CAD and see how this move actually came about. So when we're looking at this, we can clearly see that this is a nice uptrend moving all the way to the upside. The market is making higher highs and higher lows, pushing all the way to the upside, and it actually came to this level right here. And what we see is that the market actually came to a nice order block right here. This is actually where you would start marking your order block from wick to wick and stretching it out like that and waiting for the market to actually come to this level right here and taking your buys. But again, like I always say, you want to switch to a smaller time frame. When we switch to a smaller time frame, we can clearly see that the market came to this nice zone right here, and it's been making lower lows and lower highs, pushing to the downside. But we want the market to start changing in character. So if the market was making lower lows, lower highs, pushing to the downside, we want the market to start changing in character and showing that it wants to start pushing to the upside, and that is when we would actually take our buys to push all the way to the upside, and this would be our take profit. We don't want the market reversing all the way to our entry and wiping out all our profits. So this is another nice example of how you can actually go about doing this. Wait for the market to come to your order block and to actually start changing in direction. So if it was making lower lows and lower highs, you wanted to start making higher highs and higher lows, and this is when you would actually start taking your buys and pushing all the way to the upside with the market. So just a trade recap, what we want is to actually mark our order block when we are moving in a downtrend. This is our bearish order block. We want the market to actually start pushing all the way to our order block, start changing in direction, and we're going to sell with the market. And in a bullish order block, we want the market to come to our order block right here. But first, we want the market to create volume. So the market has to push all the way to the upside, come to our order block, start changing in direction. And that's when you're going to be taking your buys to push all the way to the upside. To grow your small account, you want to start on an H4. Wait for the market to actually give you a proper trend. If the market is going in an uptrend, you want the market to come down to your order block in a corrective move, and that's when you're going to start taking your buys to push all the way to the upside. In a bearish trend, you want the market to actually start pushing all the way to the downside and go to your order block, and that's when you would start taking sells to push all the way to the downside. I actually didn't show you guys an example of how to actually go about taking sells using the smart money concept. Let's just go over an example. So again, in a downtrend, what you want is for the market to actually push to the downside, creating lower lows and lower highs, pushing all the way to the downside. This is how you actually see that the market is clearly pushing to the downside. If the market is moving in random directions, it is best to actually step out of the market and not trade at all, because this strategy is not going to work well. The strategy works well when we are in a clear downtrend or clear uptrend where the market is making higher highs and higher lows, and you would actually wait for corrective moves to come to your order block and continue pushing in your projected direction. But when the market is moving in random directions, it's best to actually step out of the market and look for proper setups. So right here, we can clearly see that the market is moving in a nice downtrend where we clearly see that the market is making lower lows and lower highs. But I want us to look into detail as to what actually happened right here. Like I said, we actually want the market to make a lower low, come back for a corrective move, and that's when we would take a sell to the downside. The market to actually come back again, make a corrective move, and that's when we're going to take another sell to the downside. And after our last impulsive move to the downside, we want the market to actually come all the way to the upside to our order block, and that's when we're going to take our sells to the downside. Let's switch to a small time frame like our H1 to see if we can actually identify an order block. When I look to my left, I can clearly see that we have a nice order block right here, and I'm going to connect it from wick to wick, stretch it out like that. You can clearly see that the market actually gave us an impulsive move. The market broke structure right here. This was a nice breakage of structure. The market broke structure right here, pushed all the way to the downside. And after breaking our structure, it started pushing all the way to our order block. And when it came to this order block right here, we actually have to wait for the market to give us a change in direction. You can actually go to even smaller time frames like your 30-minute chart to see if you can clearly see what the market did right there. When we look at what the market did right here, we can clearly see that the market was making higher highs and higher lows. It came to this order block right here and started making equal highs, indicating that the market is actually struggling to push above this level right here. And when the market actually broke structure right here, that's when we knew that the market would actually start pushing all the way to the downside. When I switch to a 15-minute chart, that's when you would actually see that the market actually did break structure right here. We had a low right here where the market actually broke that low, came back to this level, and this is where you would actually start taking your shorts. You always want to make sure that you risk less than what you're trying to gain, and this would have been a beautiful trade to the downside. And this is how you actually use this strategy. I hope you guys enjoyed this video and gained so much value from this video. And if you did, please do make sure that you like and comment on this video, subscribe. And if you guys want more clarification on how you actually go about using this strategy, do comment in the comment section below. I will be happy to answer your questions, and I'll catch you on the next one. Peace.